What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm a long-term dividend investor sharing my journey to $100,000 dividend investment portfolio while answering some of y'all's questions and taking you along for the journey. And if you're not new to my channel, this is a different background than normal. I'm helping out some family take care of the house because they just had surgery this week, so that's why there's a different background. But nonetheless, this week's video is going over my best stocks and my worst stocks. It's almost going to be an entire year since I started this dividend investment journey, so I thought it'd be nice to kind of analyze my portfolio a little bit, go over my best choices and my worst, and then kind of decide where we're going to go from there. But before we do that, don't forget to subscribe to the channel if you have not already. Leave a like on my video, it helps out my channel so much, and then comment if you have any questions, I will get back to you. Now let's roll the intro. So if you've been following me here on my YouTube or you follow me on TikTok, you know that I go over my dividend portfolio every single week, going over the value of it and going over the buys that I did do for that week. So before we hop into the video, let's go over that really fast. So hopping into my dividend portfolio on Robinhood, as we can see on the day I'm down $30.40 or 0.26%. On the week I am down $47.10 or 0.4%. On the month I am up $73.91 or 0.63%. On the 3-month mark, I am up $295.50 or 2.57%. And then on the year, I'm up $1,612.62 or 15.85%. And then the year is going to be the same as the all-time because I've been investing for almost an entire year now. I'm super excited to go over my year-long journey in next week's video, but we'll leave that for next week. And then unfortunately, I did not make any buys this week. Now I did have a lot of bills that piled up on me that I had to pay for this week, so unfortunately I wasn't able to put any money into the stock market this week. But next week will be great because I do get my commission check this week, so it's a nice little extra bonus on top of my regular pay. But yeah, I think it's important to highlight that I didn't buy anything this week because I had other priorities to pay for. This is literally about me, an average person, building long-term passive income to show y'all that you can do it too. There's nothing special about me. I still have bills to pay for. I'm still in school full-time and I still have a full-time job. I just want to build this community of long-term dividend investors or just long-term investors. You don't necessarily have to be a dividend investor to follow me, although I do prefer dividend stocks or good quality stocks that just so happen to pay dividends. But anyways, that's a weekly portfolio update. Let's hop into my biggest winners and biggest losers. Going over my biggest winner in my dividend portfolio, it's a company I talk about a lot on this channel, Microsoft. So as we can see for Microsoft, I have 3.42 shares at an average cost of $219.34. I am up overall $285.72, which is about 38%. As we can see, my market value for Microsoft is at $1,037.08, making up about 8.8% of my entire portfolio. I mean, what else can I say? I make TikTok videos on the tech sector of the stock market for a reason. Microsoft is just going to continue to drive the tech sector of the stock market and apparently my portfolio. But like I said earlier, this is a good quality stock that just so happens to pay dividends. Although the dividend yield is not too great at a 0.72%, the fact of the matter is they still continue to pay dividends, which is amazing. They have a healthy $2 trillion market cap. And I mean, I don't think I need to harp on Microsoft too much. And I hope this shows you proof about how great Microsoft actually is. I mean, as we can see, I recently made a TikTok. As we can see going into this chart that I showed on my TikTok a couple of days ago, the tech sector was already booming before the pandemic. Just after the pandemic to present day, the tech sector has gone up $2 trillion. I mean, that is absolutely insane. The tech sector of the stock market is going to continue to go up more and more and more. The pandemic only put it in hyperdrive. And I know a lot of people will say that the tech sector is kind of cruising now, which I kind of agree it is. But I still think that there's so much more room for growth. Even though we are going back to somewhat of a normal, a lot of stuff is still going to continue to be online. We need these tech innovations and they're just going to continue to provide them. So that's why more than about 15% of my entire portfolio is made up from tech sector stocks. And there's no surprise that actually my second biggest winner is already on this chart already. That'll be Apple. Now hopping into Apple, I have 5.27 shares at an average cost of $121.27, giving me an overall return of $149.72 or about 23.39%. And then going into the market value, it's valued at $789.90, which is going to make up about 6.71% of my entire portfolio. Again, looking at this amazing tech stock, they are not specifically a dividend investment stock. They are just an amazing tech stock that just so happen to pay dividends. They're even lower than Microsoft at 0.56%, but again, I'm investing into Apple for the long term. Ideally, I want that 4% dividend yield of my entire portfolio, which is why Apple and Microsoft make up less than 15%. Because I do have some more aggressive holdings, but as we can see, Apple again is at a $2 trillion market cap, I mean, I don't think I need to harp on this anymore because I think everyone knows just how great Apple is. And to be 100% honest, I don't believe that they're going to stop growing. They're going to continue to grow week after week, month after month, especially with their amazing earnings. They have been consistently beating what the analysts have been predicting for them. But the reason that Apple is a little bit less than Microsoft is because when I actually bought into Microsoft, they went down a little bit and I had the opportunity to buy more shares at a cheaper price. So for the time being, Microsoft is a little bit more than Apple. But as time has gone on, I'm buying more shares of Apple, and I'm going to continue to dollar cost average my way back in. And hopefully they're going to be about even, but I see myself holding on to these stocks for 25 plus years. But I'm not going to sell off my shares of Microsoft or Apple anytime soon. I think they fit perfectly into my dividend investment portfolio, not only with giving me great returns, but also paying me dividends. See, that's the amazing thing about investing into the stock market. You don't necessarily have to be a dividend investor to reap the rewards of long-term stock holds that just so happen to pay dividends. And like I said earlier, I do want that 4% dividend yield. And because I have stocks like Apple and Microsoft, I do kind of want to compensate for that a little bit. And as a result, I have my biggest losers. Now, my biggest loser to date is actually NIO. I have 5.20 shares at an average cost of $55.63. That's a total negative return of $87.21. Or negative 30%. That's a market value of $202, which makes up about less than 2% of my entire portfolio. Now, this was a great lesson for me to learn early on in my investing. I specifically wanted dividend stocks or stocks that were amazing and just so happened to pay dividends. And I got caught up and I kind of FOMO'd into NIO. I was super scared of missing out on these gains because it was all over TikTok, it was all over YouTube, it was everywhere. And originally when I bought in, I had a decent return of about $30, and so I continued to buy in more, bringing me up to that 5 shares. And then as soon as I bought my last share, it actually dropped to where it's currently kind of teetering at right now. There's potential for this in the future, but of course I'm going to tax harvest this and just sell off if it's still negative by the end of the year, because this stock does not pay dividends. It was more of a speculative stock. For those of you that don't know the company NIO was supposed to be the next Tesla out of China, and their production got shut down, resulting in a lot of people holding the bag, including myself. So for the time being, I am just going to hold on to it until the end of the year till I can tax harvest it. And for those of you that don't know what tax harvesting is, it's basically selling off your negative stocks to balance out the dividends and the gains that you get in your portfolio. Now, my portfolio isn't big enough to do anything crazy like that yet, but for the time being, I am just going to do that and ride the wave. And then going into my second biggest loser, I'm extremely sad to report this, because this was such a great dividend aristocrat, but unfortunately in the recent months they fell off. And I'm sure all of you are going to know what I'm talking about as soon as I say the stock. My second biggest loser is AT&T. So with AT&T, I still have 17 shares at an average cost of $29.17, giving me a total negative return of $28.83, or negative 5%. That's a total market value of $466.99, which makes up roughly 4% of my portfolio. Now, I just want to say, for this being my second biggest loser, negative $30, it's not that bad. And this is a dividend paying stock. Even though, yes, they did cut their dividend, they still are going to continue paying dividends, which is why I'm holding on to them for now. Who knows what the future will hold? I made an entire TikTok about it, but even though they cut their dividend in half, they don't have the debt that they owe for their media company anymore, so it leaves the room open for them to grow even more. So even though they went from a 6% dividend yield to about a 3% dividend yield, I still feel like they're a good quality company to hold on to, at least for the time being, until I decide I want to sell off this stock. But I also do want to get those new shares of the new media company from Discovery, so I kind of want to see where that goes, as well as see how well AT&T does. But I am still a little bit bullish on AT&T. A lot of people say that's stupid, but at the end of the day, I'm not down too much. I've been paid more in dividends than I am down right now currently. Granted, I have not been buying the dip, because like I said, I do want to see how they perform the rest of the year, and then I will make my final decision then. But it is sad because I did see this company as a long-term hold. I didn't want to hold them for 25 plus years, and now with a lot of my favorite YouTubers selling off their stocks of AT&T and all the bad news, I'm still going to be optimistic on it. I'm still getting paid dividends from it, and I'm just going to wait until the rest of the year to see what happens with AT&T. Now, those were my biggest losers as well as my biggest winners so far in the past 11 months of investing into this portfolio. I hope y'all are enjoying the content so far. Even though I did start investing about a year ago, I've only been consistently making content for about 7 months now. But I hope this content is what y'all want to see. Again, if there's anything more specific that you want to see, feel free to comment down below. Because ultimately, I'm just here to show y'all that an average guy like me and you can build a dividend portfolio. That is all that I have for y'all this week. I hope y'all enjoyed it. Like the video, it helps out my channel so much. Don't forget to subscribe to the channel if you have not already. And again, comment if you have any questions or you want to leave your thoughts on AT&T. Because I am interested to see what y'all think. I don't know, I might be crazy by trying to hold on for it for so long. So let me know in the comments down below. But thank y'all again so much for watching. I will catch y'all next week. Peace.